All right, everybody, it's Mike Brady, Get Seen, Get Sold again. We're back. I was able to find my guest. We had a little link mishap on my fault here, but no problem. So I have Edie Short from Finance of America, mortgages out of Hamilton, and let's bring Edie in. Hello.
And I appreciate you taking the responsibility for the mishap, but it really was mine.
No, it's fine. It's fine.
But we're all
I know how that works.
yeah, we're all learning during these times right now.
Absolutely, absolutely. And these are some very crazy times. And Edie, why don't you introduce yourself and tell everybody about who you are and what is it that you do?
So I am Edie Short. I'm a mortgage advisor at Finance of America Mortgage. I'm a bilingual mortgage advisor. So if you know anybody who needs representation in Spanish, I can help out with that. And I've been in this business since 2000.
Okay, great, great. So we're seeing a lot of new things right now due to coronavirus and what they're calling our new norm. And I know they call it the new norm, but it seems like we have constant changes almost on a daily basis the way we're doing business. You know, I know that the companies I work with are constantly sending updated emails on, you know, this is the policy, now this is the policy, and this is the procedure. I'm sure things are constantly evolving in your end of the business too.
Yeah, they certainly are. It's really, like a roller coaster right now. And just, change is happening so fast and we can't predict that change. But, our team is adapting quickly and, we're all working remotely and fully operational. So, that's the silver lining and all
Sure.
that. And thank God we're able to do that. But yeah, change is happening really fast. And, we're just working through it the best we can.
So right now with the market the way it is the loan application pretty much still the standard type of application and then running through the process, or have things changed dramatically?
So the application process really is the same. We've, always had the ability to do online, over the phone, or face to face. Now there's a little tweak to the face to face right now, but we can do it through Zoom or FaceTime if somebody would want to do that. So, we have to make the adjustments to keep everybody safe and healthy, but it's pretty much really the same that it's been.
Okay. How are rates looking right about now? I see there's a lot of movement in the market, a lot of movement with the Fed. Unemployment unfortunately is at its all-time high. I think it was like 6.6 million people applied for unemployment, obviously due to the lack of work for non-essential employees. But what's the rates looking like at this moment?
So rates seem to be stabling right now. I don't know if you had heard about the Fed getting involved with buying mortgage-backed securities. And they were really buying too many, and they have backed off of that a little bit. So, we're seeing rates in like the mid threes right now, which is, really still a great opportunity for people.
Sure. Yeah, no, it definitely makes it a buyer's market when you have favorable rates like that.
Yes.
Yeah, that's great. Can you shed a little light on some of the information that we're hearing as far as deferred payments? So we hear, people are getting deferred payments for like 90 days, 3 months or whatever on their mortgages. Then there's some rumors it's either going to mean come month 4, you're going to have to owe 4 months all in one shot and pay it all together, or are they putting something in a plan to pay that off X amount of time, or is it due at the end of the year? What's that situation look like from your standpoint?
So I think, it's really a touchy subject. I know it's a touchy subject right now. And people hear forbearance and don't typically understand what it really means. You go to a furniture store and you purchase furniture and you have deferred payments. It doesn't mean that you don't ever have to make those payments. You're going to have to make them at some point. So same concept here with forbearance. My best advice would be don't assume, don't take somebody else's word for it. make sure that your lender what their procedure right now, what their policies are in regards to somebody, seeking forbearance. So it's touchy, because people don't understand. You are going to have to make those payments at some time, whether or not they're going to tack it on to the end, or they're going to make you, for example, if you were to defer until July, come July, you could potentially have to make 4 payments.
Okay, that's good to know.
Best advice is call your lender and make sure that you're clear about what they have available, what you qualify for, and what the expectations are.
Sure. I would think that if you have the means to do so, you should probably continue to pay your bills as normal. And I know that's easier said than done, because we're, even if you have the means right now, we still don't know where we're going to be at in 2-3 months from now. And some people may be trying to hold on to what they have. But, I think if you can pay it, but you definitely got to get clarification from your specific lender on how they're going to handle things. And I think, with today's society, you probably need to get that in writing also. It shouldn't be a verbal, because you're really going to need some recourse in the event you're told one thing and then something else happens 3 months down the road.
Yeah, for sure. Yes.
So I get you and I are Facebook friends, and we have a lot of things in common and everything else. I see your post every day. I'm just gonna say I love the fact that you have a positive thing for every day to say out there. What gives you all your exuberance every day?
So I might get some judgment for saying this, and I'm okay with that, because it's about my mental health. It's about what I let in or keep out so that I can continue to have a positive attitude. But first thing is I don't watch the news. I have started watching a little bit just so that I can get like local ordinances and things like that. Or if I can find that information somewhere else, but I do not watch the news. I never have. Because it typically is so negative, and there's so much that is publicized that is beyond my control. So I try not to let those things in, but I'm a kind of go with the flow kind of gal.
Okay.
So that helps me. I meditate. We have a lot of laughter in our household, so that certainly helps. And nobody wants to hear doom and gloom. I mean,
Right.
and the things that you're focused on in your life I believe, are the things that you're actually going to bring into your life. So if you're focused on negative, that's where you're vibrating. That's what the universe is going to send back to you. So I try to keep it light and happy and work through things as best I can. Unfortunately, we're in this situation, and it is what it is. And we have to, we can't change it. It's here, it's happening. So we have to work through it as best we can. So that's kind of,
Yeah,
but
no, it's great. I mean, it's great that that's the way you handle it. And, people handle things differently and everything else. I'm at home with my wife, and I have 4 boys here and my mother-in-law. And, so there's 7 of us. We have space, but at the same time, the space every day seems like it gets smaller and smaller and smaller. So we're practicing, tolerance. We're practicing a little more patience. We're talking to the kids, more as to, hey guys, this is kind of the situation we're in. We're looking at a few more weeks. We need to come together as a family and plan on how we're going to handle our time management and our space together. And what are we going to do to go the extra step to be kinder and a little bit more gentle with each other? Because, it's 4 boys and me. So it's a lot of testosterone and aggressiveness. We don't have any broken sheetrock just yet, but, I've had to break up a few fights in the kitchen, and, it's going, it's part of what's happening. It's just crazy where we're at today. And how are things over at your house there?
They're good, actually. Like, so far, so good, I have to say. I mean, Kevin is my best friend. So having all this extra time to hang out with him is working out just
Awesome.
fine. I have 1 teenager in the house. So I think that is a blessing right now.
Sure.
kids are learning math and things like that, like you have to pull up a YouTube video to help them out, and then they're ended up teaching you because you don't know how they do things. But we're keeping to a schedule as much as we can, and I think as parents we really have to have some flexibility right now because this is trying times for them too. They're not in school. Ryan said to me, I think it was maybe a week and a half ago, we took a car ride and he was so excited just to be in the car.
Right.
And he said, I've never wanted to go to school as much as I do right now. And so that was like funny, so
Sure.
you really have to have some flexibility because it's not just us that's impacted by it. Their world is turned upside down too. And you do have to work together. But I mean, so far so good here. There've been no fights. We're eating a whole lot.
Yeah.
I know I am. I know I'm probably going to come out of this thing 2 sizes bigger than what I am. But Ryan's enjoying all the home cooked meals.
That's awesome.
Previously, it's like 7:00 at night sometimes, and I might still be working and I'm scrambling and I'm like, dude, you have to eat a sandwich tonight, or, but so far so good.
That's good.
Yeah.
So, we don't, we like to keep these things kind of brief and short, but being that you are a professional in the mortgage industry, so what do you think? So there's people that aren't homeowners yet. What can they be doing at this time right now to help kind of tighten up some of their financing? And what should they be doing with their credit reports and stuff to, put them in a better position when we clear out of this? Because I believe we're going to have an influx of properties on the market. And then I believe it's going to end up being a buyer's market. So how can we prepare these new buyers for this coming surge?
So really what I'm going to say is consult with a mortgage advisor, whether it's me or somebody else. Like, that's the best way to get your plan in place, is to let a mortgage advisor see your complete financial profile and set some expectations and you might be in a position to do it now. Right now it is riskier times, so you are going to see lenders, if not already, tightening up on their guidelines and eliminating some products, putting them on suspension until, this all clears out. But, really a consultation doesn't cost you anything. It's just time that you're going to have to invest anyways at a later time when you get pre-approved. So why not look at all that now and figure out the plan now? We can put it at bay until but I would say consult, go ahead and consult now. Why not?
Yeah, no, I agree. We're trying to prepare our buyers and stuff, and buying a house it's not an easy process, and it's not an automatic thing either, and it really does take some planning. Physically, emotionally, and financially, there's a lot involved, and it's one of the most stressful times. And I agree. Right now, people should be taking a look at what their FICO score is. Credit Karma is a good gauge, but it doesn't tell the whole picture, but it gives you kind of an idea of where you're at. But you need to talk to somebody like Edie, who is a mortgage professional, who will be able to point you in the right direction and set you on the right track. She's not going to pay your bills for you, but she'll tell you where you need to be with the current loan products to see where you fit. We just to dispel some other rumors, some people still think that you need 20% down to purchase a home, and that has definitely changed. And just give me another minute, Edie. Can you just explain the difference between like a FHA and a conventional?
Yes. So a conventional loan first let me say this. I think there are pros and cons to every type of product. So typically when I pre-approve somebody, I give them all the options that they approve for, and we can do a side-by-side comparison to determine what works best for them. So FHA loans are really geared towards first-time home buyers. Okay. So FHA and conventional, there's differences in your down payment. FHA requires 3.5% down. You can get a conventional loan for 3 to 5% down. Okay. The other big factor is when you don't put 20% down on a mortgage, you're going to be paying something that's called private mortgage insurance. You may have heard PMI. That's what it is. So it's insurance that you as the borrower are paying for, but it doesn't benefit you. It benefits the lender in the event that you would default on your mortgage payments. Okay. So FHA charges a flat fee, and they charge two types of mortgage insurance. There's one that's built into your monthly payment, and then there's one that is paid upfront at closing, typically gets rolled into the loan. You can do that. You don't actually have to pay for it in full at closing. Those are flat fees, regardless of credit score, regardless of down payment, regardless of debt, how much debt you have against your income. It is a flat rate. With a conventional loan, it is not. It's called risk-based pricing. And there are private companies that we get that insurance from. There's a handful of them across the country. And we plug in your information and get a quote. And so the higher your credit scores are, things like that, the better your financial profile is, the less expensive that PMI is on a conventional loan. So those are just like a couple differences. Also with appraisals, you'll see that, you know, an appraisal for an FHA loan may have some more requirements than it would for a conventional loan. So just a couple of differences there. I hope that helps.
No, it definitely does. It sheds a little bit of light on it. So, you know, if you have questions about the difference between FHA, conventional, the different types of products and how they work, by all means, reach out to Edie. Tell everybody how they can get in touch with you.
They can get in touch with me either via email at eshort@financeofamerica.com or call me on my cell at 609-410-0793.
Perfect. Edie, thank you for coming today and speaking with us. I appreciate it. And we'll talk to you soon. Everybody, if you have questions, you can put them in the comments. Edie will be able to read them later. And hopefully she'll be able to answer your questions. Reach out to her and, you know, talk to her and see what your financial future looks like as far as buying a home. Edie, thank you again and have a great day and be safe.
Thank you, Mike. I appreciate you asking me to join. Everybody have a great day.
All right, bye. Well, there you go, folks. That was Edie Short with Finance of America Mortgage. We really appreciate her taking the time to log in. I know, you know, even in this COVID-19 situation we're in, the mortgage people are actually still busy. A lot of people are still buying and selling, and we're getting things done. So if you have any questions for me, put it in the comments. You can always give me a call at 856-558-3464. I'm available, mike@mikegrady.com. You can text me, email me. Remember, hashtag get seen, get sold. And I am New Jersey's most convenient realtor. Have a great day.